Good morning, Wall Street winners. It is Friday, May 24th, and I think we're in for a bit of a muted day today, but a positive day. We're heading into a US long weekend, into the Memorial Day weekend, and typically, as we head into a weekend, trading is busy in the morning for the first hour to maybe 2 hours. 9:30 to noon, and then it usually becomes a little subdued and quiet on the Friday afternoon heading into the weekend. We can see that starting the day, it's now 8:30, so we're an hour away from the open. The three US indices, the Dow Jones, S&P 500, and NASDAQ are all in the green, which makes it look like we're off to a positive start for the day, kind of following what happened yesterday with the amazing news out of NVIDIA at the end of the day, Wednesday. If we look at our Yahoo Finance app, you can see that crude was down. It's coming back. I think today is going to be a good day for oil. So if something does dip in the oil area, the refinery sector, I would look at picking some of that up today, but probably getting out by 11:30 or noon today, because I think things are going to be pretty flat after that hour. You can see that we've got a few things in the green here in the retail and healthcare space. We'll see how that opens. Not a tremendous amount of activity there, so not one that I'm that engaged in. I do really like JB Hunt today at if it opens below 158. I think there's a lot of potential for this to get back up into the 160, 162 to 4 range within the next 30 days, and that would be a nice little percentage increase in a 30-day period. May happen faster than that, but I would look at that as maybe a 30-day buy and hold at worst case. It is continuing to trend down, so I would take profits in that if it does recover. And I wouldn't buy it at open. I would wait to see kind of what it does. You can see here at open yesterday, it dipped down quite a bit off of a previous high. So it did close back up almost at 158 and then dip down into the 156s. So I'd watch that for a dip, and I definitely would have some interest in acquiring some of that. The other one that I'm going to be watching today is Valero. We've got a lot of these oil stocks in the green in the pre-market. Valero is not. It was in the negative. Now it's basically even at what it closed at. We'll see what happens there. Crude was off a little bit this morning, and it's now recovered, only down 9 cents. So I think if you do see a bit of a dip in any one of these, it might be an interesting opportunity, because I think it would recover by the end of the day. We get into technology. Most of our tech companies at this point have reported for the quarter. One exception to that, there are a few exceptions, but one exception that I am keen on seeing the results for is Salesforce, which is CRM by the symbol, the ticker symbol. And it is announcing, it dropped almost 1.5%, a little more than 1.5% yesterday. It's down almost 2% pre-market today. So it's an interesting stock to be watching. It's reporting earnings in 5 days. So on May 29th, it's coming out with earnings. The earnings are expected to be very good. If we look at one of the articles here on Zacks that can be found in the notes to the stock on the Yahoo app, you'll see that analysts are expecting some significant year-over-year increase of 40.8% in the quarterly earnings. So subscription revenue, they're anticipating to climb as well. All of these are boding well. Now, what we have to hope for is maybe a good AI story coming out of this and some good future guidance. And maybe, like NVIDIA, a stock split potentially. I'm not sure that that's going to happen. Or some type of dividend announcement. And that would certainly be positive as well if there was any kind of dividend increase. But I think at 178, this is a stock that, if we look back into the 6-month time frame, has easily been above $300 and should get back up above $300. If we look at the 5-year chart, you can see here it's had some significant peaks and valleys. And although we are near a peak, typically those peaks tend to get higher, and we kind of plateaued out at the most recent peak. So if we do get some good results, and I mean, this is a company where it's selling software as a service, it has great monthly and annual recurring revenues. If it continues to grow those, it has a lot of potential to propel this stock forward. So I'm a big believer in CRM. I think it's going to do well. And when it dips $4 or $5, I think it's a good entry point. Even if you just get the $4 or $5 recovery on that in a short period of time before or after earnings, you've done pretty well for yourself. If we continue to scroll down, Palo Alto is slowly climbing back. I mean, it was in the 320, 330 range prior to earnings. It did dip down to 295. It's back up to 311, probably on its way up to 315, 320 in the next couple of weeks. It's making some progress. Our semiconductors and those related to that industry are doing very well. So ARM in the 112 range, holding on. You saw a huge drop yesterday in On Semi, down $5, which is more than 5% in that stock, but back up 75 cents in the pre-market today. AMD was making some good progress and then dove yesterday. Even though NVIDIA was a shining star, doesn't mean that the rest of them are. We saw Qualcomm off a little bit. Workday down $28. This is a huge move with Workday. So clearly some bad results coming out from Workday, and a bad outlook, and that has significantly affected that stock. This could be an interesting entry point when we see a dive of 10 or 11%. Usually it rebounds 1 to 3%, so might be worth taking a look at Workday. We also have our NVIDIA up 11, almost $12 pre-market. So this stock was a rocket ship yesterday after earnings, up 80, call it $89. Google was off though. So I think Google at 175 is an attractive buy. I think it should get back up into the high 170s, 180s. It's got a great story, but you could sit on the sidelines and wait for it to dip a little bit further. The big question mark in my mind right now is, although we have earnings coming out as well for Adobe mid-June, really those are the last two of the big tech companies that we follow here that have yet to report. I think we're going to see a bit of a lull in June, and the story and narrative in the market, because the news media is going to, the financial news media is going to need something to talk about. It's unfortunately going to come back to interest rates and cuts being pushed out further. And it's also going to come down to the wars for the White House, which is just a grim topic overall based on the two likely candidates to be running in that. So with that, there could be a bit of a pullback in June. So I'm keeping a fair bit of dry powder and some money on the sidelines so that if we do see a drop, I can make a move and jump on that and take advantage of that opportunity. I do think that there's a potential for a pullback in financial services as well. So I am watching these carefully and waiting for the right time to buy. I like the fact that M&T Bank is dropping down in from the 150s into the 140s. I think that will likely go back into the 130s, and that would be in the low 130s. That would be a buying opportunity in my mind. If Morgan Stanley comes back into the low 90s, I would definitely be taking a look at that. Goldman has just been riding a bit of an upward trajectory here. Be watching that one too, because I think we'll see good results there. And then TD, it just is an abysmal stock these days. Companies having a bunch of different issues with with money laundering stuff and loan loss provisions. It's just such a laggard. The only good news coming out of this is it is fairly cheap in terms of pricing at its current rate, and it does pay 5.4%. So if you're looking for something in Canadian dollars that has a great dividend, you're going to basically earn the federal interest rate or the Canadian interest rate at the time, a little bit more at 5.4%, and you'll get that in a dividend payout on a quarterly basis. And you have some potential for capital appreciation. You just need to have a good 1 or 2 year time horizon on that, because there's no saying when this stock is going to turn around and they're going to start to get out of some of the misery that they're in right now. So that's where we are today. Just know that it's really about a half trading day, even though the market's open for the full day. Most folks are kind of shutting down around noon in the US, if not earlier than that if they come in at all. So watch your trades carefully, take your profits when they're there, and good luck with your trades. If you like these videos, please subscribe to the channel and leave me a like. And